We'll get started. So welcome to the Expat Tax Thailand webinar for the Swedish asset holders in Thailand to explain the specific Swedish-Thai double taxation agreement rules for personal income tax in Thailand. The purpose of this presentation is to provide you with the up-to-date information. Here at Expat Tax, we're here to help individuals in Thailand understand their Thai tax filing obligations, understand the rules so they can make better informed decisions. We are here to help. So who's the content useful for? Well, anyone that holds Swedish assets and lives in Thailand, or holds Swedish assets and looking to relocate to Thailand. So I'm Carl Turner. I'm the co-founder of Expat Tax Thailand, and we are here to help expats understand the rules, and we are fully licensed and authorized and regulated by the Thai Federation of Accounting Professionals. Now, today I'm delighted to be joined by our guest speaker today, Rifat Habib. He holds 2 master's degrees in Sweden in finance, banking, international business, and he's an advanced level accountant consultant. So he's been practicing in Sweden for over 10 years, and Rifat will help answer questions on the Swedish side of the tax. And I'm here to explain the new Thai rules and the filing obligations for the Thai tax returns for Thai tax residents. So welcome, Rifat. Welcome to joining the webinar.
Hi, everyone. Yes, this is Rifat Habib. I take it in Swedish.
That's great.
Yep.
Wonderful.
Ja, jag jobbar som en redovisningskonsult för senaste 10 år. Jag har mycket erfarenhet inom området bokföring, skatterådgivning, allt möjligt. Jag hoppas jag kan hjälpa er med frågorna som ni har. Yeah, thank you, Carl.
Thank you very much. So, on to what we will discuss today. So, first of all, we'll talk about the new Thai tax rules. We'll talk about specific certain type of Swedish assets and what happens if they are remitted, which means transferred to Thailand. We'll talk about what assessable income means in Thailand. We'll talk about what is taxable and what isn't taxable. And we'll explain what common reporting standards are and how the Thai Revenue Department knows about types of income that are remitted to Thailand. We'll also go through some case studies, and then we've got time for the Q&A questions at the end. So the type of assets that we will discuss today are the most common Swedish assets, which are pensions, property rental income. We'll talk about property sale and transfer into Thailand. We'll talk about dividends and how they are taxed if they're brought to Thailand. We'll also touch on investment capital gains, investments that are based in Sweden that are transferred to Thailand. So it's quite a lot to go through. So if you do have any questions, we have a frequently asked questions page on our website. Also, there are going to be further changes with the Thai revenue code. If you would like, you can sign up for our tax alerts by email, and we will make sure that if there are any changes, you will receive the first ones to receive any updates with any tax changes in the future. Just a quick disclaimer, the content provided is for information purposes only, does not constitute professional tax advice, and it shouldn't be acted upon in isolation. It's for information purposes only. So let's talk about who has to file taxes in Thailand. So what are the requirements? So if you have what we call assessable income. So you have pension income that you bring into Thailand, rental income, investment capital gains that you bring in, or dividends, and you transfer this money to Thailand and you live in Thailand for 180 days or more in a calendar year. You are a Thai tax resident. If you do bring in this income and you bring in over 120,000 Thai baht, if you're married, from investments, dividends, or rental income, you have to file a Thai tax return, regardless if you have tax to pay or not. If it is from pensions, then you double this amount to 240,000. So that's who needs to file a Thai tax return. How do you file? So first of all, if you need to file, you need a Thai tax ID number. You can obtain that from your local revenue office in Thailand, or we have paid service to obtain Thai tax ID numbers for people who need to file a tax return. Just to confirm, if you don't have income accessible income that you bring to Thailand, you don't need a tax ID number and you don't need to file a tax return. It is only for people who bring in, transfer, remit foreign source income over those limits that we mentioned earlier. So for pensions, you need to file a PND 90 tax return. That is, so the calendar year is the tax year, so 1st of January to the 31st of December. You need to file a tax return from the 1st of January for this current year, from the 1st of January 25. The last date to file is the 8th of April 2025. So you can file yourself online or at your local revenue office, or you could use a paid service like Expat Tax Thailand to take that hassle away. We do have a full online application and process, and we can guarantee all of the allowances and deductions. So let's talk about the double taxation agreements. We will go through, I'll give you a brief explanation, and we'll go through some of the common misconceptions about the Swedish Thai double taxation agreement. So there are many misconceptions that we see by email or people that we've spoken to about if there is, with the Swedish Thai double taxation agreement being in place. It might be good if Rifat could just maybe touch on this slightly about what does it mean, and does it mean that people, if there is a double taxation agreement, which we know is in place, do they have to do anything, Rifat? This is important. So maybe it'd be good just for you to explain in Swedish for people, just so there's no misunderstanding with me talking in English, if that's okay.
I take it in Swedish.
Yeah,
no?
great, wonderful. Thank you.
Okej, det finns sådana missförståelser när det gäller DTA, Double Taxation Agreement. Man behöver inte göra någonting. Det stämmer inte faktiskt. Man måste deklarera. Det finns ingen undantag. Double taxation means att man behöver inte betala 2 gånger. Det betyder att om man har betalat en gång, man får ta den med den andra staten. Typ om vi säger att ni har betalat skatt i Sverige, då ni tar den i Thailand också. Och man gör en avstämning mellan dem. Så slutsatsen är att man måste rapportera eller deklarera. Yep.
Okay, thank you very much, Rifat. So I think I'll explain in English from what I see is many people say there's a double taxation agreement, so they don't have to do anything. If they are remitting in foreign source income like pensions, investment capital gains, or rental property income, then it's likely they have to file a Thai tax return, even if there's a DTA in place or not, if they bring it in to Thailand and they're a Thai tax resident. So let's talk briefly, before we get into the double taxation agreement specifics, let's recap about the Thai tax rules. So There was an announcement in September 2023. That's the document on the left, which actually explains that now it was published in the Royal Gazette in October last year. It mentioned that they are going to overrule the previous ruling. It is not a law change. It is an interpretation of the existing rules. Basically means if you bring in foreign source income and you are a Thai tax resident, then you are liable for to file a tax return in the year that you bring in the income. And the document on the right was something that was published in November last year, 2023. And that explains that if you have cash in the bank from previous years, so pre-2024, then that is not assessable income. So two very important documents. As I mentioned earlier, the tax year starts 1st of January 24, ends 31st of December. So the calendar year, the last date to file a tax return paper-based is 31st of March. And if you file online, it's the 8th of April next year. So the Thai revenue, they've produced documents in July to explain how do foreigners in Thailand pay tax on their foreign source income. Thai revenue have done a good job to explain this in detail. So it's quite clear from our side how this works. They've produced documents and they've actually been on, they've produced video content with other embassies to actually explain this in detail. So it's my job to try and help demystify the rules, explain specifically for Swedish tax, who have Swedish assets. So I'm here to help. Who would this affect? So anyone who's in Thailand 180 days or more are a Thai tax resident. It doesn't really matter on your visa status, whether it's smart visa, marriage, retirement visa, business visa, elite visa. It doesn't matter. You are a Thai tax resident and you adhere to the Thai rules if you're 180 days or more in a calendar year. The only exclusion is the LTR long-term residency visa. It might help with people that bring in capital gains or pension income if they can bring it with, it can help with foreign sourced income. There are tax exemptions for this visa type. They have to bring in the income in the following tax year. We have a webinar on this. If you'd like more information, feel free to get in touch. So it looks like the rule changes will change again to become worldwide taxation on assets. We don't know how that will look. It is not to scaremonger, but it looks like things will evolve and change. We are here to help people with this. So if things do change, it's important to stay up to date. You can sign up to our tax alerts so that we can keep you up to date with any change that comes about, and we will be the first ones to let you know. So you can do that through our website, through the tax alerts section on there. We also have many useful videos for specific types of assets, so pensions, investments, capital gains, to explain it in more detail. This is to give a general understanding for the rules. So let's get started. So under the Thai Revenue Code, section 40, there are 8 parts. So you can see on there that pensions and salaries are under part 1. Investment capital gains, dividends are part 4, rental income part 5, and property sale is part 8. So it shows that all income sources, if they are remitted, transferred to Thailand, are classed as assessable income. So what isn't taxable? So we know that if you bring in these types of income, they are assessable income. What isn't? So any asset or income that's transferred so anything that isn't transferred into Thailand. So Thailand is still a remittance tax basis. It's not global taxation on your worldwide asset. It is remittance. So if you transfer or spend in Thailand. Also, cash balances as of the 31st of December 2023. This is not assessable income. So if you bring that cash balances in, that doesn't need to be declared on a tax return. So cash as of the 31st of December 2023. Remittance of original capital. So if you have investments or property and you don't make a gain and you bring in those assets, that is not assessable income. You are bringing in original capital. Inheritance in Thailand, if it's from overseas, this is not assessable income. Gifts, complicated, but potentially gifts are not taxable. They're under gift tax rules. It's different. Loans are not taxable. If you transfer, if you're a non-Thai tax resident, so less than 180 days, and you transfer money into Thailand, that's not income, assessable income. And people who have this LTR visa, if they bring in the income in the next tax year, this is not income. So I thought what we could do is Rifat could just explain this in Swedish in a bit more detail, if that's okay, just to talk through these points so that, you know, my Northern English is understood from our Swedish audience. So I'm trying to help, if that's okay, Rifat. Is that okay to just run through the key points?
Yeah, you can for sure.
Thank you.
Yes, I can try. Okej, saken är, det finns tillgångar, inkomster som man behöver inte betala skatt för. Till exempel om ni inte överför någon tillgång eller inkomst till Thailand, då behöver ni inte betala skatt. Det kan vara så att ni hade pengar på bankkontot till och med 31 december 2023. Då ni behöver inte betala skatt på den heller. Om ni har typ inkomst eller vinst från investering, om ni inte överför till Thailand, ni behöver inte betala skatt på den heller. Om det är någon gåva, då behöver ni inte betala skatt. Det gäller samma sak med löner också. Och sen om ni har bott mindre än 180 dagar i Thailand, ni behöver inte betala skatt heller. Och sen det Carl nämnde om LTR, jag har inte så mycket koll på den, men om ni har visum på LTR, då ni behöver inte betala skatt heller. Yes, Carl, I tried my best to explain.
Yes, thank you very much. I think it's really important for the key points that you know, we try and help the people on the webinar with this. So thank you very much. Thank you. So let's talk about the common allowances in Thailand. So let's say you do have income and you bring that into Thailand, it's classed as an income. And what's the next step? So first of all, we look at the Thai allowances and deductions. You get certain allowances and deductions. Everyone gets a personal allowance, 60,000 Thai baht. If you are married and your spouse does not have an income, you get another 60,000 Thai baht. If you have children, then you get another allowance if they are still in education. If you have health insurance and a Thai health insurance, you get allowances as well, up to 25,000. And also one of the big ones is if you are 65 or older, you get another 190,000 allowance on top of all of this. Once we take off the allowances and deductions, there are more, like if you donate to charity, things like this, but they're the key ones. Our website has all the information on there. If you want more detail, please get in touch. I'm happy to help. Once we take off the allowances and deductions, then we look at the tax brackets. So the first 150,000 is tax exempt. Then it is progressive, like most tax systems. It's not a flat rate, it's progressive. So the first 150,000 of income is tax exempt. If you bring in over 5 million Thai baht of anything that's classed as income in 1 year, after your allowances and deductions, then the tax rate above that is 35%. So it's not a flat rate, it is progressive. So, you know, we do have a tax filing service. We can help people stay compliant with our online tax filing in Thailand if that's needed. with different services for different people. We're happy to help with this if that's the way people need to go. So what's the purpose of a double taxation agreement? Let's go into the DTA. The main purpose is just to help people not pay tax twice and get double taxed. But it doesn't mean you don't have to file. It allows taxpayers to understand the clear rules for how assets are taxed if they are transferred into Thailand, for example. And the double taxation agreement takes precedence over local domestic rules. So if the double taxation agreement says one thing, the local rules say something else, you follow the double taxation agreement, if that makes sense. So the Sweden-Thai Double Taxation Agreement, it was actually signed in 1988. So it's reasonably old, 29 articles, 35 pages. And it really sets out how pensions, investment, capital gains, property sale, property rental income are taxed. And what we will do is just go through the different types of assets now for the Swedish Thai DTA. But we also have researched all of the 61 double taxation agreements with Thailand. So let's say you have assets in another country. So remember, it's all to do with the jurisdiction, the country where your assets are based, not your nationality. So let's say you have a pension in Germany or in the US or an investment in Hong Kong, for example. We look at the double taxation agreement between that country and Thailand, not your nationality. So that's important. If you need help with any other ones, we do have other webinars for some of the other double taxation agreements, and we're happy to help with questions. So let's talk through what tax credits mean, how to get refunds and things like this. So let's talk about Swedish assets. Remember, Thailand is a remittance tax basis. You are taxed if you transfer funds into Thailand. So what does the DTA say about pensions, rental income, property sale, dividends, and investment capital gains? So let's start with pensions. We get many questions about pensions, and I can see on the Q&A there are some more questions about pensions. So this, we need to look at the double taxation agreement. So there are two articles that are important, and that's 18 and 21, if you'd like to view it yourself. So Thailand actually has the exclusive right to tax pensions, and that's under Article 21. So it means it's taxable only in the state of residence for Thai tax residents. So what does that mean in principle, in practicality? So this, if you are a Thai tax resident, so 180 days or more, and you live in Thailand and you bring in, remit, transfer Swedish pension into Thailand under the double taxation agreement, it shows that Thailand has the right to tax the pension. What does this mean? It means you can potentially claim a refund in Sweden on the Swedish tax from the Swedish tax authorities. If this isn't possible for any reason, then potentially you can use the tax as a credit in Thailand. But the reality is, under the DTA, it clearly states that it's taxable only in the state of residence. So if you are in Thailand, what's the practical steps? If you bring in the pension into Thailand, then you need to file a Thai tax return for the pension income you have brought into Thailand. If you have multiple multiple pensions, you need to put all the pensions down that you bring into Thailand. So one of the questions is about, on the Q&A that I can see, mentions, what if I send the money to Wise, and then I transfer from Wise into Thailand, so a third-party bank or currency exchange company? Well, all we care about is the money that's transferred into Thailand, and we look at the Thai baht amount, then we look at what the source of that money is. So if that's from pensions, then we put that down on the tax return, and then we can potentially claim back the tax in Sweden for that at a later date. So it might be good just for Rifat just to explain that in simple terms, if that's okay, Rifat. So basically, the tax in Thailand, if it's remitted in, it's under the revenue code, it's taxable in Thailand. you get a 100,000 deduction on top. But apart from that, yes, it's assessable income. Unless, let's talk about the little caveat. If you have a government pension, which I mean is civil service pension, so you've worked for the Swedish government, or Swedish military, then this is not taxable in Thailand. It's completely tax exempt. That's one of the exemptions on the DTA. You don't need to file in that case. It's only taxable in Sweden. But for all other pensions, they are, if you bring into Thailand, we have to declare on the Thai tax return, and we can potentially claim back the tax in Sweden. So Rifat, are you okay to try and explain that? Please.
Yeah, I can try.
Okay, thank you.
Ja, okej. Saken är, om man var kommunanställd till exempel, eller har jobbat hos staten, då behöver man inte deklarera, eller man betalar noll i Thailand. Men om ni har andra pension, typ som Carl nämnde, private pension, så det kan vara tjänstepension som tjänstepension från en anställning hos en arbetsgivare som är inte en kommun eller liknande. Då behöver ni veta att det måste deklareras eller betalas i Thailand. Men enligt artikel 21, enligt artikel 21, man måste betala i Thailand, men eftersom man måste betala eller deklarera inkomsten från pension i Sverige också, det betyder att ni betalar äntligen dubbelt. Men man har möjlighet att få refund efteråt när man deklarerat från båda två. Det betyder Carl kommer att berätta lite mer om detta. Carl, I just explained that you're going to say how it's going to be for them who is paying tax on pension in Sweden also. But according to the Article 21, it has to be declared and paid in Thailand. But you have the chance to get back from Sweden afterwards. Yes. Now you're going to talk about it.
Yes, great. So Rifat, is this something that you can potentially help with? So let's say someone does have to claim back a tax refund for because of the double taxation agreement, because they are a Thai tax resident. Is this something that you could help with for people? Because obviously this is outside of our realm. We just help with Thai tax returns and Thai tax compliance.
Yes, of course. I can do that. Yes.
Okay, great. Yeah, thanks. We'll make sure that we put your details in the email follow-up and in the video to help people so they can ask questions. Yeah. Okay, clear. So let's get on to rental property income. So this is different. This is not the same as for pensions. So with rental property income, it actually states may be taxed in the other state. So what does this mean in reality? So it means if you have a property that you rent out in Sweden, you declare the tax and pay the tax in Sweden. If you then bring that money into Thailand, so you remit, transfer the money into Thailand, or you transfer to a third-party bank and then move the money, it doesn't matter how the money comes in, then you need to file a Thai tax return. You need to put down that rental income, but you can claim back as a tax credit any tax you have paid on that rental income in Sweden. So what it means by may, it means Sweden has a right to tax, fine. And then if you bring the money into Thailand, it may be taxed in Thailand, but you can claim back the tax credits. So it's likely with the Swedish tax rates that, to be honest, it's an administration job for pension income, sorry, property rental income rather than a tax implication in Thailand. Rifat, so let's just one more thing that before we get started is, if you do bring the money into Thailand, and let's say you are, you get Thai allowances as well, up to 30% of the amount before you pay tax, but we can offset with any tax that you paid in Sweden. So maybe you could just explain that, Rifat, that basically, yeah, in simple terms.
Ja,
Okay, thank you.
Ja, jag ska försöka att förklara på svenska också. Okej, det är så att om ni har hyresintäkter i Sverige, då det ska räknas som kapitalinkomst i Sverige, och i Sverige du betalar 30% skatt på hyresintäkter. Men det finns, ja, det beror på också till vem du hyrar ut till. Typ om du hyrar ut till ett eget företag eller till närstående, då du betalar skatt på hela summan. Men om du hyr ut till utomstående, då du behöver inte betala upp till skatt på upp till 40 000 kronor. Det betyder utöver 40 000 kronor ska du betala skatt med 30%. Carl nämnde att eftersom skatt i Sverige är lite högre, då det betyder egentligen att, eller vi kan säga att om skatten är mer än 30% i Thailand, då behöver ni betala resten. Annars, det är ingenting att betala, men man måste rapportera den. Ja, Carl.
Thank you very much. Thank you. And then about sale of a property in Sweden. So let's talk about this as well. So let's say you live in Thailand. All of this relates to Thai tax residents. So 180 days or more in the calendar year that the event takes place. So let's say you do live in Thailand for 180 days or more. You sell a property in Sweden. Then you decide to bring that money into Thailand. What does the double taxation agreement say? It says the same as rental income. So it says Thailand may tax this. So what does that mean? It means Sweden obviously has the right to tax you on the capital gains on the property. And then if you bring the money into Thailand, you have to declare on a Thai tax return, but you can use any tax paid as a tax credit, which again means potentially there could be tax to pay in Thailand depending on the tax rates in Sweden and how much you bring in. But it's more likely that it will be an administration issue. But if you are looking at selling a property in Sweden as a Thai tax resident, I recommend you just seek advice just to see what the implication is for your situation. It's really important to seek advice for these big sales as a Thai tax resident to see, does that cause implications for you if you bring in? Okay, and then on to dividends. Let's talk about this. So dividends may be taxed in the other states. So this follows the same rules as property rental income and property sale. So it means if you have dividends from Swedish equity or company, then you can be taxed in Sweden. If you bring the money into Thailand, then you can offset any tax paid in Sweden on the dividends, but it means you have to file, and there is potentially tax to pay in Thailand. You can use any tax paid as a credit. I think that's pretty self-explanatory, Rifat.
Yes. Okej, jag försöker igen att förklara lite om vad heter det, när man säljer en bostad i Sverige. Okej, jag ska berätta lite mer också angående hur mycket du behöver betala skatt egentligen med olika scenarier. Först och främst, när du säljer en bostad, det betyder att du har köpt innan. Och om själva priset eller du säljer med vinst, då måste du betala skatt på den. Vanligtvis är det 22% skatt du betalar. Men du behöver inte betala skatt om du köper en ny bostad. Samtidigt priset på bostaden är mer än den gamla. Då du får uppskov, permanent uppskov. Annars, om vi säger att du har sålt din bostad i Sverige och du har överfört pengarna i Thailand, då måste du deklarera i Thailand också. Som Carl nämnde, att det kan vara så att du har betalat mer skatt i Sverige faktiskt. Och då är det ett administrativt arbete som du gör i Thailand, inte mer än det. Och när det gäller skatt på utdelning, ja, om du får utdelning från typ ett aktiebolag, eller du har ett aktiebolag i Sverige och du får utdelning från den, då du betalar 20% kapitalskatt upp till utdelningsutrymme. Men det är samma sak att om du överför pengarna till Thailand, då måste du deklarera. Och om själva procenten är mer i Thailand, då du behöver resten i Thailand. Annars det är bara ett administrativt arbete, inget mer. Yes, Carl.
Yes. Okay, great. So let's talk about investment capital gains. So when we look at the double taxation agreement, then we look at the same rules apply with pensions. So what does that mean? If we look on there, the double taxation agreement specifically shows that it's taxable in Thailand and not in Sweden. So that's what the double taxation agreement states. It's the same as pension. If you remit the investments into Thailand, we look at the capital gains in Thailand, and we look at the tax, the gain that you've made, and that needs to be put down on the Thai tax return and filed in Thailand. So let's talk about how investment capital gains are taxed in Thailand. So we look at the investment capital gains, then we look at exactly, if you look on here, selling, paying, transferring, exchanging. So any gain that you make that exceeds the cost of the investment. Capital gains tax. So there's two methods we can look at. We have webinars and videos on capital gains specifically, but I'll just touch on the basics so that you can kind of get a good grip of this. So if you're remitting capital gains, you can use first in, first out, or moving average cost to calculate the capital gains. And if it's like a trading platform, we look at the all-time gains on there. We don't separate out. We can separate out each stock, whatever you sell and bring into Thailand, be put down on a Thai tax return. So we have a webinar specific for capital gains and for pensions as well. But let's go on to a few case studies because and we can actually help answer some of the questions through the case studies. So 4 case studies that we'll go through. If you have any questions that are answered on the webinar, we will get back to you individually. We're here to help. So let's talk about the first case study. They live in Thailand 180 days. They have a Swedish bank account and they have cash in there that they can show was in the bank account last year, so in 2023. So 31st of December 2023, they have a large cash balance. They decide to transfer 2 million Thai baht into Thailand from that account. If they do that, they do not need to file a Thai tax return. they do not need a Thai tax ID number because this is not assessable income. You only need a Thai tax ID number and need to file if you bring in remit foreign sourced income into Thailand. Next case study. So gains made but not remitted to Thailand. So you're a Thai tax resident. Remember, Thailand is a remittance tax basis. You make gains on your investment property overseas. Let's say you have property rental income. You decide not to bring the money into Thailand. You keep it overseas. If you make the gain and you don't remit into Thailand, you don't need to file a Thai tax return for investment capital gains, for example. Case study number 3. You have property rental income in Sweden. So somebody, they transfer in 2 million Thai baht from property rental income. What does that mean? They would need to file a Thai tax return, but they can offset the tax that they've paid in Sweden on the Thai tax return for that property rental income. So let's look at this calculation. Someone brings in property rental income. We take off that 30% deduction because of the allowances you get in Thailand. So if you bring in 2 million Thai baht, in this example, the taxable income would be 1.2 million Thai baht, for example. So the overall tax rate for this person would be 9.25%, the average tax rate. So if the tax in Sweden was more than this, there would be no tax to pay. We would claim as a tax credit. Yeah, so I hope that will be useful. And then also let's have a look at an example of investment capital gains. This is the same for pensions and investments. So if you remit in the pension or investment capital gain, you need to file a Thai tax return. Let me go back to the original slide to show you the example. If you bring in more than, let me show you here, this is the simple term. So if it's investment capital gains, dividends, rental income, and you married, and you bring in, transfer, remit more than 120,000 Thai baht of gains or dividends or rental income, you need to file a Thai tax return. If you bring in pension income, it's double this amount. So it's 240,000 before you need to file. So if you're not bringing in that amount, you don't need to file. Or if you're bringing in cash from previous years, you don't need to file. But if you are not, then you do, if that makes sense. So let's talk about investment capital gains. So somebody sells 2 million Thai baht of shares in a general investment account, and they bring that money into Thailand. Now, if they surrender the shares, let's just assume they've got a 50% capital gain. They transfer the money into Thailand. We can use 2 methods to calculate the gain. That's first in, first out, moving average cost. But let's assume that we already work out they've got a 50% profit or gain on their investment, and they bring in 2 million Thai baht. How do we calculate this? First of all, we work out what the original capital is and what's the investment gain part. So they bring in 2 million, there's a 50% gain. Then we use that calculation there. So that's in other webinars and it's on our website also. We look at 2 million Thai baht, divide it by 1 plus the gain percentage. So that's to work out the original value. And then the difference is the capital gain. So if you bring in 2 million baht of investments, sell investments and you bring it in and you've got a 50% gain, it actually means the capital gain that we put down is 666,000 Thai baht. So just to give you an understanding, it's not all the money you bring across from your investments. It's only on the gains. That makes sense. And for the pensions, it's different. For the pension, it's everything you bring across is classed as income with the deductions. So if you do use a different method to calculate the gains, we can use moving average cost as well. Let's look at the calculation. So here, for this example, if someone brought in 2 million Thai baht and 50% was a capital gain and they were married, then they would get allowances of 120,000 Thai baht. Assessable income, 666,000. And Then we take off the allowances and deductions. So their taxable income is 546,000 Thai baht. Then we look at the tax tables. And in this example, they would have 5% tax, which is 34,500 Thai baht of tax to pay in Thailand. If they paid tax on that in Sweden, potentially they can claim that tax back. But under the DTA, then they have to file a Thai tax return for this amount. If anyone would like to run through the tax calculators, we have a free service available where you can book in a 15-minute call to go through the tax calculation for your own situation. We can help give you an idea for how much the tax potentially may be for different situations. My colleague Jason is available for calls. He's an expert on running the tax calculation, and we can help. If you know the capital gain percentage or what you are bringing in, we can help you do the calculations. We'll send the link out with the email, and it's also on the video under the notes. You can click there and book in a time to speak. Also, if you'd like to arrange a consultation to go through your situation in more detail, we can arrange a one-on-one consultation. Let's talk through common reporting standards and how will Thailand know about this. So basically, Thailand signed up to something called common reporting standards. They signed up in 2020, and Sweden are one of the founding members of common reporting standards. It means OECD countries and other countries signed a pact for free flow of tax information between the different revenue departments. So most EU countries, there's 120 that have signed up now. It's a global initiative to stop tax evasion. What's actually shared with common reporting standards? So if you are a Thai tax resident and you have assets in Sweden, bank accounts, investment portfolios, pensions, that information for yourself is relayed to the Swedish Revenue Department every year. Account balances, ins and outs, transaction history, name, and tax ID. That information is shared every year in an XLS file with the Thai Revenue Department. So that means that that information is already shared automatically every year now. So it means the Thai revenue have transparency if they wish to look at people that are living in Thailand. And this is, so the common reporting standards means that they have full transparency. From September last year, Thailand started to receive the data from all common reporting standard countries. So obviously, like all tax and revenue departments, implications for not declaring and not paying tax that's due are quite punitively charged, up to 200% of the tax owed. Surcharge of 1.5% per month for every month that the tax is owed. Same as all tax authorities, they can be quite harsh with that. So what are the tips and advice for people to look at this? Maybe consider the LTR visa. Keep a good record of what you bring into Thailand. You can separate out the different income sources so we can potentially see what the tax liabilities are. And just remember, we are here to help, to advise. We can help with the free tax calculator, 15-minute call to actually go through your situation and just understand if you do have a tax liability and what you need to do. We can help with the one-on-one consultations and the tax filing at the end of the year. And also we can help obtain Thai tax ID numbers if people need that. But we are here to help. It's not scaremongering. It's just to explain the rules, and then people can decide what they need to do. We've got helpful guides. We've put together information to really help people understand. And we're here to help people. So if you'd like to look at the tax alerts, I think that's really important because there are further changes that will come with this. So let's start with the Q&A. We've had a few questions in beforehand by email, and then we've had quite a lot of questions in. So We will try to answer as many as we can. If we don't get to your question, please let us know and we'll try to help with these, because it is complicated. Rifat has done about 9 hours research to put this together. So there's been a lot of work that we needed to do to touch upon these rules, let alone knowing the rules already. So let's look at the first question. Are withdrawals from a Swedish pension fund taxable if remitted to Thailand and if I live in Thailand full time? So yes. So if a Swedish pension, and it's not a civil service government pension, let's say it's a private pension, you remit into Thailand under the DTA, it's taxable in Thailand. You have to declare on a Thai tax return in the year that it is remitted. You can potentially deduct off tax that you have paid elsewhere, but it's likely under the DTA, you should claim back the tax in Sweden and pay the tax in Thailand. That's how it works in principle. I worked for the government of Sweden for 25 years and I lived in Thailand for the last 3 years. I receive a monthly pension. Do I need to pay tax in Thailand? No. If you have a government pension, civil service pension, like military pension, or you've worked for the government, you don't need to file a tax return in Thailand. It's only for assessable income. Some of the questions that have come in. One interesting one that came in that I think Rifat would be really good to explain would be about limited tax liability. So if you are limited tax liable in Sweden, do you have to file a tax declaration in Sweden if you are limited tax liable in Sweden? Rifat, are you okay to answer that? I think, to be honest, it would be better to answer in Swedish because it's for the Swedish, viewers' benefit, not for mine. So it'd be good to explain in Swedish. It's okay.
Yeah.
Thank you.
Okej, ja, jag tar den på svenska då. Så när det gäller begränsad skattskyldig, ja, ni måste ni måste ansöka om, den särskild inkomstskatt som heter SINK. Så man måste skicka den. Så du börjar med ansöka med SINK och du ska betala 25% skatt. Om det är begränsad skattskyldig. Och hoppas ni har koll på vad är obegränsad och begränsad skattskyldighet. Som sagt, det är 25% skatt ni ska betala. Om ni inte ska skicka den SINK, då kommer det bli Pensionsmyndigheten kommer att ta vanligt preliminär skatt. Det betyder, ja, om vi säger 30% istället för 25%. Så därför är det jätteviktigt att ni skickar ni ansöker om särskild inkomstskatt eller SINK. Annars ni får betala hela skatten. Och när det gäller när ni får betalt från Pensionsmyndigheten, då är det ni får ett fribelopp. Det betyder att ni får ett avdrag på i 2024, då är det 3677 kronor. Ni får avdrag och på resten ni betalar skatt på den. Ja, för att svara på frågan, ni måste skicka den ansökan till Skatteverket.
Okay. One more question, Rifat, around this. So the question are, what are the steps that need to be taken to be considered limited tax liable in Sweden? Are there any additional steps needed beside getting rid of all ties to Sweden? So might be good just to talk about what ties you as a limit to make you limited tax liable in Sweden, if that's okay.
Yes, för att förstå begränsad skatteskyldighet, ni måste förstå vad är obegränsad skatteskyldighet. Det betyder att Om ni är inte obegränsat skattskyldig, då är ni begränsat skattskyldig. Och obegränsat skattskyldig betyder ni har på något sätt samband eller relation med Sverige. Till exempel, ni har bott mer än 6 månader i rad i Sverige. Ni är folkbokförd i Sverige. Eller ni har anknytning till Sverige. Typ ni har bostad, familj, verksamhet eller viktiga tillgångar. Då på ett sätt man kan säga, om ni inte har någon anknytning i Sverige längre, ni är inte folkbokförd i Sverige, eller ni har inte bott här mer än 6 månader i rad under året, då är ni begränsad skattskyldighet. Yeah.
Okay, great. Thank you. Thank you for that. So I have one more question, which is, I think it's good for me to sort of answer this one. So I had a question, we've had a question in. It says, if I sell a property in Sweden and buy a property in Thailand in my wife's name as a foreigner, I can't own land. How is it with tax for the Swedish property in that case? The property stroke house in Thailand is not in my name, but in my wife's name. So if you are I'm assuming this person lives in Thailand when they sell the property. If they sell the property as a non-Thai tax resident, so they sell it in a year when they are not in Thailand for 180 days or more, then this is not classed as assessable income in Thailand. If they sell the property when they are in a year when they are 180 days or more in the calendar year, then they've made the sale in a Thai tax year. That means if they bring that money into Thailand in that year or any year in the future, it is classed as assessable income on the capital gains on the property. So we have to work out what the capital gain was on the property. If you've paid tax in Sweden on the capital gain, you can deduct off the tax you paid in Sweden. But if you bring the money in, you have to declare it, and there may be more tax depending on the tax brackets. The purpose of buying the property in Thailand is secondary. It doesn't matter what you bring the money in for. If I send the money to my wife, or I send it to the property developer, or I send it to my bank account, it is still me remitting in the funds. So it really matters where's the source of the money that I remit into Thailand. If the source is a property sale and it was a sale from a property in a Thai tax year, then I am liable to file for the capital gains, which I can only deduct off the tax that I've paid in Sweden. That makes sense. Rifat, are you okay to try and explain that in a way that might be understandable a bit more than me talking?
Yeah, I can try.
Thank you very much.
Okay, first of all, I'll try most from Swedish perspective because I know
yes, wonderful. Explain it. Wonderful. Great.
Okay. Det är så att om man säljer typ någon tillgång, typ en bostad här, och ni har gjort en vinst, så då måste ni betala skatt här med förutsättningen att ni köper inte en ny bostad. Och om vi säger att ni har sålt och ingen vidare inköp i Sverige, istället ni har överfört pengar i Thailand, då behöver ni betala skatt på vinsten här, 22% som är exakt. Och sen enligt Carl, han menade att när ni överför pengar i Thailand, då ska man se ursprunget till pengarna. Då om det är så att ni har sålt en bostad i Sverige och har fått en vinst på en viss summa, då ska ni betala skatt, eller man ska räkna skatt på den vinsten. Eftersom ni redan har betalat skatt i Sverige, kanske ni behöver inte betala skatt i Thailand med förutsättningen att Thai skatt är mindre än svensk skatt. Yes, it's correct.
Okay, thank you very much. I had one question about inheritance. I think maybe it was it's just a bit of a communication or misunderstanding. So with inheritance, what I'm talking about is the Thai tax obligations, not overseas. So yeah, I'm just talking about if you remit in inheritance into Thailand, then it's potentially not taxable in Thailand. But I'm not talking about tax on inheritance overseas. So I'm just talking about if that's remitted into Thailand. So that's just to confirm with one of the questions. Okay, one question that's really good for Rifat to answer is what income documents from Sweden should I present to the Thai tax department? So Thailand, to accept a Thai tax, for tax credits, we need a formal document from Swedish tax authorities regarding tax paid, for example. When are these documents issued, Rifat? Like, when you file your tax return, what does it look like? How does it look when people get this? So what are the documents that you receive showing tax paid, Rifat?
Carl, can I request you to repeat it because it was
Yes. So what income documents from Sweden should you present the Thai tax department? So all we're asking is, what are the documents in Sweden to show the tax has been paid? When do you receive that? What does it look like?
Yeah, okay, I take in Swedish then.
Okay.
Or should I take in
great. Swedish is good.
Okay, yes, okay. Först och främst, eftersom i Sverige man deklarerar, vad heter det, man skickar inkomstdeklarationen då. Skatteverket har koll på mest av intäkter eller inkomster ni har det. Jag tror det är bättre om man kunde skicka själva inkomstdeklarationen till myndigheten i Thailand. Men samtidigt om det är så att ni har till exempel har sålt en bostad här och ni vill visa att det själva det är inte hela beloppet ni ska beskattas som Carl nämnde, att det är vinsten som ska beskattas. För att prova det. Det är bättre man har dokumentet typ när ni har sålt bostad och ni har fått så mycket pengar och vinsten är så mycket. Så det kan vara bra att börja med skicka själva inkomstdeklarationen som ni har skickat i Sverige samt andra dokument som visar att ursprungligen av vinsten, typ om det är en vinst från bostadsförsäljning, då är ett dokument att ni har sålt, typ överlåtelseavtal eller köpeavtal. Något som kan hjälpa mycket. Men om det är vanligt, om det inte är någon försäljning, det skulle räcka med att man skickar inkomstdeklarationen som ni har skickat till Skatteverket i Sverige. Yes.
Great. Yeah, I had someone mention that they found you very useful, Rifat, and they said it's really good to find someone that can speak in Swedish and English to discuss this in detail. So thank you for this, Rifat. Really appreciate you joining.
Yeah.
The question was, how do they file the Thai tax return in Swedish? So we actually, Expat Tax Thailand, we have a client portal, and our client portal, you can actually change the language to Swedish. So all of the key information is on there in Swedish if you'd like to file in Swedish. Our data collection, though, is in English on part of there, but the majority of the portal can be done in Swedish. We can help with the Thai tax filing, and then if you do need help with the Swedish side, Rifat has a company in Sweden to help with Swedish tax filing or Swedish tax
Yes.
credit returns. Is that right, Rifat?
Yeah.
How can you
Yeah.
help people?
So
How can you help people, Rifat? What are the how can you sort of help this?
yes, I can help with tax filing from beginning to the end. If I get all the documents and such, then it will there will be no problem for me to submit, because I do it every year and regularly, and I have quite much experience on that also. Yes.
Okay, great.
But at the same time, I can say that if there's if there's any questions or anything that is missing, I'm going to ask for those documents, so that everything is correct.
Okay, great. And then we have the final question, because time is pressing. The other question we've had is, how about this LTR long-term residency visa? So with the LTR, they mentioned it only protects if you bring in income derived from the previous year. Does this mean if I have to declare pension income if I bring in pension in the same year? So with this type of visa, we have a webinar dedicated to this, but with this has got a royal decree on foreign sourced income if it is remitted to Thailand in the following tax year. So what does that mean? It means if you have a pension, it's paid overseas, and you bring that in the next tax year. So you earn the pension, you have a pension paid, or you make an investment capital gain overseas, and you have that paid this year, you can bring that in from next year from the 1st of January without having to pay Thai tax on it. It's foreign exempt. If you do bring in the pension or income in the same year, then yes, it has to be filed on a Thai tax return. So I hope that makes sense. The good thing, if people do need help with any of this, we really are here to help. If you do have any questions, feel free to send them across. I can forward those on to Rifat as well. Make sure we leave Rifat's contact details. And if people do have any specific questions that have not been answered in the webinar, I'll aim to get back to them afterwards. Yeah, so thank you, Rifat, for your help. And for the translation, I think it's really useful for the Swedish audience to really get a good understanding in your native tongue. So thank you very much for this.
Yeah, you're welcome. I just wanted to add one thing, that the Swedish the terms in Swedish can be a little different than English. I mean, when you translate in English, it can sound sometimes a little weird or a little different. And for the Swedish audience, it's always good to have those Swedish terms. That's the most important thing, I believe, for them.
Great. So thank you for everyone for joining. And if anyone has any questions, feel free to reach out. We're here to help.
Thank you. Bye-bye.
Bye-bye. Bye-bye.